You know, as a consumer, you hear 3% checking and savings, no minimum, and you think there's got to be a catch. What's the catch?
That's a great question. That was the first thing we thought. What's the catch here? So one thing, I don't know if it's necessarily a catch. It's SIPC insured, not FDIC insured. So it's not technically a checking and savings account. It's called a consumer management account. So that's something that people who are used to a Bank of America and want the FDIC insurance, that might be hesitation for some people. So it's something to think about.
So that means basically you're not guaranteed that money back.
You are. So the SIPC insurance is up to $250,000. Okay. It looks a little bit different. So minor differences. I don't know that it'll keep customers away, especially in such a low yield environment. 3% is a big deal. But I talked to Baiju on Monday. He told me that they're sort of taking the Amazon approach. So another catch for the company is that they're actually probably going to lose money on this. So up front, they just really want to add customers. That's been their whole model, especially with stock trading. They went from 5 million to 6 million customers in 2 months over the summer. So if they can do the Amazon thing of just adding people quickly, scaling quickly, they think that they'll be able to take profits down the road.
Did he talk at all about customer outflows? I mean, in this environment in which stock trading is very volatile, the stock market has been going down. I mean, that's their bread and butter, trading, free trading for stocks as well as cryptocurrencies. Cryptocurrencies haven't been doing any better either. So is this just sort of a way to sort of put up the dams to keep the customers from pulling out all their cash?
We'll see. I think it would be a way to add new customers. I think they're getting to a point where they've talked about going public. They're growing so quickly. I think the idea that they've been working on this for 2 years. So I think they wanted to add this. They've said that they want to become a full-scale financial institution. The co-CEO, Vlad Tenev, has said, we want to go public. Think of anything you could do walking into a Bank of America, JP Morgan, you'll eventually be able to do with Robinhood. So that's sort of where they're going here. We'll see what's next for them.
Like a lot of brokerage companies, almost all of them, I think, they make money by something called payment for order flow. These guys do.
Yeah.
Without wonking out,
yeah.
Without being,
right.
getting in touch with your inner nerd.
Yeah.
What does that mean and how much they make from that?
So they sell customer trades to high-frequency traders. It's something that pretty much everybody on Wall Street does, but they've really built themselves on this kind of ethos of being not necessarily anti-Wall Street, but sort of different than the banks. So the fact that they're
selling
doing
the trade,
that,
not the data.
Right. Well, they're selling the trade, exactly. So they've said that they're never selling customer data. That's one thing you asked about the catch. Are they going to sell customer data? How else are they going to make money? They've said that's really not part of the model. They do sell customer trades, though, and that's something that they've come under criticism for, and people wonder if that's another way they're going to make money.
And I wonder, Ally shares are down today, so maybe the online banks, the ones who've traditionally tried to use the higher rate to pull people in. Goldman Sachs, which launched Marcus and tried to use its high rates to attract all that capital, will they now have to punch back? And will the consumer win in all of this if you can get 3% or more now on your checking?
You'd think. I mean, I think with the stock trading situation, people were forced to keep up. So I don't know if they'll take customers from banks necessarily, but banks spend a lot on customer acquisition. The percent rate alone, I think, would be enough to bring new customers, and not just millennials. They're really known for the cool factor, but I think they're moving beyond that of, okay, it's not only cool, but you're looking for yield anywhere. You might as well go to Robinhood. We'll see.